Kiran is saying Nifty spent some 30 minutes above day before yesterday VWAP, and we are supposed to go long there, at least sell some puts, but today morning you can easily said it was a trap. So what is not a trap and what is real? After all, it wasn't just spike above VWAP and came down. It spent good 30 minutes above there, but it happened so late in the day. All right, now again I'm telling you, what is your trading objective? Right, that is more important. So what exactly do you want to make in the markets? Do you want to make quick intraday gains? Right, okay, no. Do you want to take short swing positions which will last for a few days? Okay. Do you want to take long swing positions? All right. Okay. Now, intraday. Let's take example of intraday and let us go to this chart. So you want to trade intraday here. Now, I believe you are talking about this development. This is happening after 245. Not a good place to trade if you want to trade intraday, because not enough time left. It can go higher, it can go lower. I'm not saying it won't, but the probabilities are low. You need to trade. Let's say you want to take intraday trades, you have to trade somewhere around 2, because after that the movement starts, and you have to stop trading somewhere around 11:45, 12, because after that the movement stops and you go sideways. General observation. All right. So either you trade in the first half of the day or you trade after 2, and then as you near closing and you are not in a trade, avoid taking a trade. So intraday, this is not a good idea to trade. Also, value was clearly developing lower. Yesterday was a big down day, so I don't think this is a good place to go long, right? Because intraday trading guideline also would not give you that permission. Where would that happen? If you start developing higher value area or you start accepting above this 10-day VWAP. So anyways, this is not a good place to buy. Okay. Now, if you are a short swing trader and you want to enter into, let's say, a credit spread, again same question. Where is the value forming? Value is forming lower. All right. Now this is not value. Previous value was this. Now this is where the value is forming. Value is forming lower. Why would you want to go against that? That is, again, that stops you from getting into a short swing trade. And if you cannot get into a short swing trade, forget about getting into a long swing trade, because again, if you are trading in anticipation, like this is a support and market comes here, I will buy, that is not the kind of trading I suggest. And your observation is correct that we have spent some time above VWAP, but what is the time? When is it doing that? Is it doing around 2 a.m.? Okay, 2 p.m. Then fine. Then it's a valid trade. You can look for that. If it is doing in the morning, yes, again it is fine. You can take a trade there. But if it is happening so late in the day, it is not allowed anyways, right? So what happens most of the times, this is a pattern recognition behavior, all right, where you want to basically isolate patterns. Okay, I'm not criticizing you, but I'm just sharing my experience. Traditional price action traders, this is what I used to do. Traditional price action traders would like to isolate a pattern more than anything else. Why? Because once they isolate a pattern, they will then go back and try to find that pattern everywhere on the chart. All right, and then they say that, okay, I found it 50 times in the past 3 months and it worked 30 times, and and then this is the reward I get, this is the risk I got, and then they believe that this strategy will work, but it does not work. Why? Because imagine, like, first 10 times your pattern not working, will you really risk next 40? The human psychology does not allow you that. By the time you are like losing it on 10, or let's say you made money on 2 and lost money on 8, you are still going to look for a new pattern. Now my question is, you have to eliminate mistakes. All right, now you don't know whether a trade is a mistake or not. So what you do, you find out high odds scenario, all right, where certain things are likely to work. And if these high odds scenario are present, only and only then you go and try to take a trade. So here, no question of longs. So this accepting above VWAP absolutely makes no sense to me and makes no difference. All right, but this going lower and this going sideways, yeah, then I can look for a short trade. I will just be worried about the fact that we are at this low and we have bounced back from there multiple times. this revisit in any ways is not good for the markets, but still there is a possibility. Okay, so in this case, instead of just looking at sideways development and selling below the no demand signals, I probably give it a little more time and see if it actually retraces back to VWAP and gives me a even low risk entry, right? If you can manage risk in this particular scenario, buying or sorry, selling here, then you are allowed to do that. But if you believe that this risk is too much, then I would wait. Why? Because there is a low, there is a visual reference below the market, which many traders are looking at. They are treating it as support and buying. So smart money, what they will do? What will the smart money do in this scenario? Even if they want to take the prices down, what they will do? They will stop buying and let the markets go high. Why? Because they want their stop losses to be taken out. Let's say market goes higher, takes their stop loss and then starts falling. That probably will be the ideal time to get into shorts. All right. So that is how I look at it. Okay, we are talking about Nifty. Okay, even in this case, so you are talking about this, right? You are talking about this development. Okay, just correct me if I'm wrong. This is Nifty chart, 5 minute, 3 minute VSA, and you're talking about this VWAP. Am I correct? Okay, fine. So here also again the same thing, right? Same thing. Like let us divide it into short term trading and slightly longer term trading like short swing or anything like that. So again same logic. Short swing trading, this is too late in the day, I would not buy. Yeah, this I could have bought. Let's say if you believe that okay, this is the low, you get resisted at VWAP, fine, selling comes into the market. What is the expected behavior? It should go and tag the day's low or IB low at least. Does it do that? No, fine. Then what happens? Market recovers above VWAP. Now you believe that yes, this is a place to buy. I am going to take a contrarian intraday trade for a test of VWAP. You are allowed to buy here, but you are not allowed to buy here. And you're absolutely not allowed to buy for higher open the next day. Why? Because on higher time frame it violates so many things. Like if you want to trade from longer term, then you need a higher value area. There is no higher value area. If the value area is not developing higher, how would you think about going long? Because you have no confirmation that higher prices are getting acceptance. Now, since that is not happening, you are not allowed to go long. You can look at the value areas here. See, it's very similar to what we discussed on Bank Nifty. This is the value area here, this is the value area here, and they are clearly lower. And this close, why does this close not get any follow through? Because it was a smart money trap. All right. Now you are asking me, how do you know this is a smart money trap? How can I know whether it's a smart money trap or not? You cannot. That is the problem. People have been searching for these things for so long. Why don't they have an answer? Why there is not a single person who can confidently say this is a trap, don't buy? Or he can say that buy here, I am telling you this is going to go like a rocket. I cannot do that. I have tried a lot and I could not find it. So what I do, I try to find out scenarios. Okay, what are the high probability scenarios? If the trade facilitation is good and everything is good, then probably I'll stay with the short or I'll stay with the long. But if they are not, then I am not going to pin all my hopes on this closing and expecting the markets to go higher. Again, add to that, what strategies are you using? If you are telling me that okay, this is where I buy options, right, or I sell puts, and that too naked puts, no, not allowed. Even if you say that I am going to buy futures for next day's opening BTST, not allowed. Okay, then what strategy is allowed? So if you want to trade from a slightly higher time frame, I would again suggest credit spreads that would be far lower from this price. And then even the market, if it comes lower, yeah, you will make some loss, but then you will have ample opportunity to adjust your positions to make sure that you don't lose more, or you can get out at a smaller loss. But imagine you entering here with a futures position and you have a stop loss somewhere here or a mental stop loss at that, and if the market tanks or if market just gaps down below this, then what will you do? So these are not high probability scenarios. Okay, if you are getting excited by this close, then you are absolutely coupled with price, and that is going to create a lot of problems. See what happened here. What happened here? So much of down move, right? So much of down move, such a sharp fall, and you can go and see higher time frame chart. Higher time frame chart. What does it show? There is this swing low, there is this HVN. So we come. There is some, obviously there is some room still for the markets to go. But then, what will you prefer? Let's say you shorted somewhere here. You are making this much amount of money. Will you prefer to make this small amount, or will you say that okay, it is very close to this swing low, lot of people are watching that swing low, it might create a bounce, so let me book my profit or at least hedge my position and go home worry free? What happens the next day? Market goes higher, and then again it comes down intraday. You could have gotten out at that place if you had a hedge. If you did not have a hedge, market is going lower, your paper profits are vanishing. What do you think you are going to do when the market is trading right here at the VWAP? Will you be able to hold and see whether the VWAP holds or not? And you only pointed out, like during the close, the market actually went above that VWAP. Then you are absolutely getting out at a very wrong place. Make sense? So you could have gotten out at a much advantageous position depending on how you are reading the markets. And if you are just looking at price and where the price will go, that is going to create all sorts of problems. If you are looking at the markets in terms of risk, whether the risk of holding longs, whether the risk of holding shorts are high or not, then I think there is still a chance. Okay, you can frame some really good reward, risk to reward situations, good entry points, low risk entry points. And low risk entry points does not mean a guaranteed entry point. Low risk entry points only means that you will be able to define a small risk very, very clearly. If it does not work out, you get out of your markets positions. All right. So that is how I would do it.